Let me give you a hopium chart. I just need to share it's an Ethopium chart. That's ETH
Wow, that's a hopium.
versus ETH last year. I can't find a closer fit. I can't, that's crazy. And Bitcoin is also repeating what it did last year. I mean, literally perfectly. So we've got the macro overlay. The Fed are going to keep cutting over time. The other central banks are going to be involved. We've got the seasonality in place. We've got the global liquidity cycle in place. I don't know what else is left.
Raoul Pal is a renowned macro analyst, a major cryptocurrency bull, and a former Goldman Sachs executive. Much of his work focuses on how macroeconomic conditions impact global financial markets, particularly the cryptocurrency and digital asset space, where Pal is heavily invested. According to Pal, global liquidity conditions are set to improve dramatically as central banks shift from policies of quantitative tightening and rate hikes to rate cuts and quantitative easing measures to prevent overheating economies. The U.S. Federal Reserve initiated this shift last Wednesday with its first rate cut since March 2020. Pal is confident that this transition will drive significantly higher prices in the cryptocurrency market. Though Pal is generally bullish on cryptocurrencies and digital assets, he is especially interested in leading cryptocurrencies such as Bitcoin, Ethereum, Solana, and Sway, which he has described as key players for the next cycle. In a recent video update on the Real Vision platform, Pal provided a much-needed update on the macroeconomic landscape and what lies ahead for the cryptocurrency market in the coming weeks and months. He also revealed his top strategy for investing in crypto during this environment, aiming to capitalize on what he believes is a $100 trillion opportunity in the years to come. Stay tuned as we share clips from Pal's video, where he discusses the upcoming banana zone, the cryptocurrencies he's investing in, and the best strategies for crypto investors looking ahead to 2025 and beyond. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Everything I look at, this is a killer. It's an absolute beautiful chart. It's the GMI Global Weekly Liquidity, so that's both private sector liquidity and public sector liquidity from the large global economies. It's just perfect. It leads by 10 weeks. M2 does pretty much a pretty similar job as well. So you've got that. You've got Bitcoin seasonality is always strong from this point onwards. And Bitcoin is also repeating what it did last year. Literally perfectly. So we've got the macro overlay. The Fed are going to keep cutting over time. The other central banks are going to be involved. We've got the seasonality in place. We've got the global liquidity cycle in place. I don't know what else is left. It's kind of like it has to be now. Even the chart patterns, usually you get 3 touches at the top, 3 touches at the bottom of a range. That usually works. So I think all of the elements are in play. I think either way, whatever the outcome of the election, it goes up afterwards anyway. We've seen that in the past. But we saw the last time Trump was in, obviously, because Trump is very tax light, very stimulative, and he's very pro-crypto, so regulatory stuff, both for tech and for crypto, that you feel like that could be an extra juice if that were to happen. And 2016-17 was the last Trump cycle. We didn't have the Fed actually easing liquidity massively. They were just starting to raise rates, and they stopped for 2016-17. And it was the Chinese who were creating the liquidity, and the market went, bananas-tastic in 2017. Let me give you a hopium chart. I just need to share it's an Ethopium chart. That's ETH versus ETH last year. I can't find a closer fit. I can't. That's crazy. The other thing about the ETH Bitcoin cross is it's actually driven by the ISM and the business cycle. So you're kind of all in that point on a weekly, for those who like technicals, on a weekly DMARC count. ETH just put in a 13 low as well. It feels that everything is in place, but that chart is quite remarkable. Now, we know that these charts fall apart just when you want them the most to work. So expect it to not work, but it's just interesting contextually. I've got a very strong thesis on this that as the market cap of crypto goes up over time from 2 trillion to where I think it's going, which is 100 trillion, you're going to generate more wealth than any other trade in all human history in the shortest period of time. And that gets recycled into art. And, I started buying X copy really in January and have been buying all year. that triggered a whole bunch of people. And I've shared the thesis a lot with people that, the really culturally relevant things will be highly sought after first. But I think it'll broaden out again. Art doesn't go away. And so we've seen punks, X-copy, and, there's very little Beeple for sale at all. So those are there. Yes, Fidenzas have come down in price, and yes, some of the others have come down in price. But I think we will see a rotation. It's kind of like, if you think of X-copy and Beeple and punks as Bitcoin, you get Bitcoin dominance first. And as the market broadens out, it moves to the other layer ones, layer twos, and other stuff. And I think we'll see the same here. I think we will see a big uptick in art as we start going through all-time highs, not only in Bitcoin, but in the other big one, which is Solana, because that's what people have got a lot of. We surveyed all of our hedge funds in Exponential Age Asset Management and XPAM, and the biggest trade is Solana.
According to the former Goldman Sachs executive, all indicators suggest that the long-anticipated big moves in the cryptocurrency market are closer than we can imagine and will happen almost overnight. One day, we might wake up to find Bitcoin trading above $70,000, then $80,000, and soon after, a significant surge will occur. His advice is simple: hold on for dear life and patiently ride the wave to reap the rewards. In a post on Twitter, the Real Vision CEO emphasized that the role of every bull market is to challenge investors, and your only job is to retain your tokens. If you can manage to do that, when the so-called banana zone arrives, you can finally realize some of your hopes and dreams. While there's always a risk that things may not unfold as expected, he believes the macroeconomic indicators are favorable. Although he acknowledges that they're not 100% certain, he feels confident that the odds are in their favor, and the Everything Code supports their outlook. He cautions against trying to time the market bottom, suggesting instead that investors should focus on how to gradually increase their exposure to these markets, whether through dollar-cost averaging or other strategies. In his video, Pal also discusses other promising projects he is investing in to navigate the extreme volatility of the cryptocurrency market. One project that has captured his attention in recent months is Sway, which he refers to as the Chosen One. Stay tuned for more clips from the video where Pal elaborates on his insights and investment strategies.
Just the disclaimer is I am on the board of the foundation, but I'm a mercenary when it comes to my own money, and I have for a while been thinking, all three of us have talked about this, is that this might be one of the chosen ones. And the reason being is that the team is world class. They've built, scalable blockchains suitable for 3 billion people plus. I mean, these guys are world class. They're a little bit technical. So the narrative was missing, but then started to come alive with narrative. But the reality is they've got the latency of the chain down to 600 milliseconds. It's stupid fast. They're now just building this walrus, which is a data storage layer, which is a separate token. But it's like basically AWS on top of, this whole move virtual machine idea. Then they've got Pilotfish coming, which is their version kind of a Fire Dancer, which gives it kind of unlimited TPS. And they've got a very serious biz dev team. Obviously, we've just got Circle, and there'll be, I'm sure, plenty of others, whether it's in gaming or real world assets and other stuff to come. So they're just capturing mind share. Now, don't forget, this is a low free float. And once you capture mind share in a low free float, it outperforms by definition, because there's less of it around. You can have the same mind share for ETH. It's not going to go, it's barely going to move. So I know people hate low free floats. You're going to love them in a bull market and hate them again in a bear market because they're just super beta. So I think that's the point to realize. It's also super beta, capturing mind share. They seem to be executing well, and people are looking for the next big trade. Because as Ovi was talking about, people are kind of like, well, is the Solana trade over? What's the next big one? And so it feels like it's got everything right. I think I don't see what else is going to dominate. I look at the charts of SUI versus the top 20 tokens and a whole bunch of other stuff. I don't see anything that looks close to being able to compete with it for the time being. The only things coming are Monad and Berachain. Doesn't mean that Celestia and all this stuff doesn't go up a lot, but it's very difficult to see anything that's going to outperform that chart. The other one that's interesting, I just interviewed John Wu from Avalanche, and I caught up with Piers Kicks in Portugal when I was there. And I don't know, have you met Piers yet, Mando? You've got to meet him. He's such a great guy, good friend of mine, and he's the gaming guy at Delphi. And he talked about the investment he's made in off the grid. He's like, it is the best game I've ever seen in Web3, and it may be one of the best games I've ever played. That's on Avalanche. And I got John on because of what Piers said to talk about it. That's going to be really interesting because we've not had a proper breakout. This is a battle royale game, ultra high definition, super quality. If this takes off, okay, that's a big deal. It's not really about token price for me in that. It's like, can you actually use this stuff for loyalty, logistics, deep in, and all of the things that are being talked about? But in the markets, no, I'm super concentrated. It's the Solana, Sui, and even my memes are all down to two, which is Doge and smoking chicken fish. So I'm hyper concentrated, and then NFTs is my long-term savings bucket. Stuff I want to have for 10 years, and that's it. I'm trying to keep out of trouble. I think it's a really important thing. Is if you think you've got decently strong narratives, just don't fuck around with it, because before you know it, you chop yourself up to death by trying to catch something.
Pal emphasizes the importance of maximizing your earnings before the AI renaissance begins in 2030, which is the foundation of his well-known "Don't Mess This Up" meme. He believes we are currently in the crypto gold rush era, where the total market cap could soar from just over $2 trillion today to as much as $50 or even $100 trillion by 2030. To seize this remarkable opportunity, he advises against using leverage or succumbing to FOMO to avoid losing your coins. He suggests keeping about 90% of your crypto allocation in the top 3 to 5 cryptocurrencies. Pal also recommends self-custodying your assets or using multi-signature wallets while maintaining good wallet hygiene. He advises that only a small portion, less than 10%, of your portfolio should be allocated to high-risk trades. He advocates for a long-term perspective, encouraging investors to zoom out, tune out the noise, and be prepared for market pullbacks even during bullish phases. He also suggests buying the dip whenever possible. What's your best strategy for investing in cryptocurrencies? Are you fully committed to top cryptocurrencies like Pal, keeping a small speculative portion of your portfolio? Or are you betting everything on a high-risk project that could take off overnight? Please share your thoughts and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.